Hope you're doing well. Right, welcome to CMA Final. So successfully you have completed foundation, inter, and this is the last leg of your professional course, isn't it? So it's better to complete it as quickly as possible. Okay, right. So I will be teaching paper 20A, section A. Not the entire paper, but section A. Section B will be dealt by Amarendra sir. Am I clear, Nana? So the weightage of this paper is 50 marks. Question paper is given for, if I'm not wrong, 128 marks. Question paper is given for 128 marks. That means 64 marks per SPM and 64 marks per BV. SPM stands for performance and BV stands for business valuation. Altogether you have 3 electives, right? This is the first one. Second one will be your risk management, and third one will be your entrepreneurship and startup. Out of these 3, this is the scoring one, because most of the paper will consist of problems rather than theory. Okay, and whatever the problems that are given in the material are already covered in other papers now. Okay, so basically SP and BV are nothing but summary of different papers. We have some part of management, we have some part of marketing, we have some part of accounts, we have some part of financial management. In this way, they have made up this paper. So you'll find it very comfortable, especially when it comes to SPM. Am I clear? Right, Nana. So paper is of 50 marks. So 64 marks consist of are from SPM and 64 marks is from BV. Okay, examination pattern is already known to you. 15 MCQs are given. You need to answer 15 MCQs, 15 into 30 marks. Luckily, no explanation is asked. That was a scenario in the last attempt. We don't know about this attempt. We have to wait till we get MQP. MQP. Model question paper or mock question papers, whatever you want to call it. Generally, they are calling it model question paper. Once you get that MQP, then we'll get the clarity. In the last attempt, they have not asked for any explanation. Before that, not only you have to mention the answer, but also you have to give appropriate explanation. So by the look of things, it appears that institute wants to pass the students as quickly as possible. Now it's up to you whether you want to pass or not. So the question paper is very much student friendly. If you're thorough with 75% to 80% of the question paper, you can easily answer. And please make sure one thing, Nana, please try to be in class before I come to the class. Am I clear? From tomorrow onwards. Okay, generally, if my class starts by 4:45, I will come by 4:50 deliberately, so that you get 5 to 6 minutes of grace time to relax and do everything, whatever you want to do. But once I have come into the class, I will not allow anyone to get into the class. Am I clear? Now you may argue that you are in CMA Final, etc., etc. But discipline is discipline. It applies both the ways. So in paper 20A, section A, altogether we have 4 modules. And this section is called as strategic performance management. So altogether we have 4 modules here. In the first module, that means the entire syllabus is divided into 4 parts. In the first part or first module, we are going to learn about introduction to performance management. The weightage of this module is 10% of the total weightage of this subject. And he's sticking on to this weightage. He's sticking on to the examiner, sticking on to the weightage. So in this module, what you're going to learn about? Obviously, you're going to learn about the first thing, performance. What do you mean by performance? Now, this performance is completely different to the kind of performance you people give in the classroom. Am I clear? next productivity, and next efficiency. Basic things, Nana. Performance, productivity, and efficiency. The second unit that we are going to discuss in this module is procure to pay. The entire procedure from the time we procure raw material till we pay money to the supplier. That means whatever the things that you have learned in material cost chapter, certain extent of it will be discussed here from management point of view. Am I clear? I hope you remember, Nana, who purchases raw material? Purchase department. Who receives raw material? Stores department. Raw material is purchased by purchase department. Purchase department will issue tenders, receives quotations, process the quotations, and basing on those quotations, they will choose L1 and they will issue purchase order. Isn't it, Nana? Basing on that purchase order, the supplier will deliver raw material. This raw material is received by purchase department or stores department. Upon receipt of material, the stores department will raise goods received note and forward it to the accounts department. Accounts department will match goods received note. It will match purchase order. It will match invoice. When everything is accordance to the documents available with the accounts department, then they will make payment. In fact, before placing purchase order, the purchase department has to take permission from accounts department. What sort of permission? Whether sufficient funds are available or not. Once the finance department gives approval, accounts department gives approval, then only purchase department can issue purchase order. This entire thing will be discussed from management point of view by using different terminologies. Now, whatever terminology that I have used till now is from costing point of view. Am I clear? Okay, this entire thing will be discussed from management point of view, and that topic is called as procure to pay. Next, we have now procure to pay means we are procuring from whom, Nana? We are procuring means what? Purchasing or selling? Purchasing what? Now remember one thing, this entire section, that is section A, we will study this entire section from organization point of view. That means from a company point of view. That means here we are talking about performance of a company, productivity of a company, efficiency of a company, procurement of a company, payment of a company, strategic performance management. In this section, we are going to discuss everything from a company point of view. Am I clear? So you have to keep that thing in mind. Now procure to pay. Procure means what? Purchase of. From whom you are purchasing raw material? Nothing but suppliers, right? Suppliers means nothing but vendors. Company should have a good relationship with vendors. Why, sir? So that they can extend this commercial relationship into family relationship, isn't it? No. Why? Then why? Because if you have a good relationship with vendors, you can guarantee one thing, there will be no disruption in supply of raw material. Basing on that, we have a topic called as vendor relationship management. Vendor relationship management. Then after, the most critical and important for the success of any organization in the modern era. Most critical. Now, from subject point of view, the weightage of it may be very, very less. But if you want to get into management cadre in any organization, you should be well aware of the importance of supply chain management. Any loose link in this chain will disrupt the entire marketing network. In simple terms, the success of the organization is not within the hands of organization alone. It depends on several other factors. In simple terms, the success of the organization does not simply depend on the efficiency of the organization, but also depends on the efficiency of distributor, transporter, wholesaler, retailer. Along with organization, all these individual units have to be efficient. Then only the good will be delivered on time to the customer. Then only the organization will achieve its success. The seller has produced goods, the manufacturer has produced goods efficiently. But transporter delayed delivering the goods. Because of that, the customer was not happy and he cancelled the order. Now, is it the mistake of the organization or transporter? By end of the day, not only transporter but also organization will suffer. That means success of a organization is not dependent on that organization alone. It depends on the entire network. That is called as supply chain management. Am I clear, Nana? I mean, we are not going to get into a depth when it comes to these topics. Just briefly, we'll discuss everything. The objective is to make sure that you people have some sort of idea when you go into real world. That's it. Okay, these things you will learn in a much better manner when you have practical exposure. And these things change from situation to situation. But at least you should have some sort of idea. That is the reason why in 2012 syllabus, SPM was for 100 marks. It was not an elective paper in those days. In 2016, they made it into elective. And same is being continued now also. What they realize is that as you people don't have any sort of practical exposure, you will not be able to understand whatever the terminology that we are using here. So rather than removing the subject completely, what they have done is that they have simply kept some basic concepts so that at least you people have some sort of idea. When you go into the real world, you will be able to understand those things easily. Am I clear, Nana? Right? So supply chain management. And last one, CRM, customer relationship management. This is called as VRM. This is called as SCM, which you study exclusively in if I'm not wrong, OM chapter. Okay. And customer relationship management, CRM. This is the first chapter now. So all the basic information or basics about performance management will be dealt in this module. Okay. This is the first module. Am I clear, Nana? Right. Second module will be your. So once you have understood what is performance management, what is the name of our subject? Strategic performance management. The beauty of theory is that if you are able to understand meaning of the words, then you can easily understand the concept. If you are able to understand the meaning of the words, then you can easily understand the concept. Strategic performance management. What do you mean by strategic? Strategic means strategic, sir, which is not tactical. Plan. Then what do you mean by tactical? Practical. So strategic is not practical. Strategic, tactical. Whatever the term that you have is correct, Nana, plan, but I am expecting much more clearer term here. We always plan for short term or long term. Strategic means long term plan. And this is directly linked to one of your accounting concepts, going concern concept. Everyone wants to do business for a short period of time or long period of time. That means they have a objective which they want to achieve over a period of time. In simple terms, we can call it as vision. Vision. I'm not saying that vision and strategy are one and the same. But what I meant to say is that your strategy depends on your vision. Both are long term. Vision is your ultimate objective. Vision is your ultimate objective. Okay, which you want to achieve over a period of time now. Basing on that, you will define strategy. Strategy is nothing but long term. Performance means performance. Performing what? Performance nothing but execution. Performance means nothing but execution. Am I clear, Nana? And management means, I was worried that you will use the term managing. Management does not mean managing. It means controlling. Strategy. Long-term plan. Now to achieve that long-term objective, you must have defined some step-by-step procedure, right? You have an objective, isn't it, Nana? Now to achieve that objective, definitely you must have defined some step-by-step procedure. Now that is a standard which you will define. That means you are expecting the company to achieve these standards. If the company is able to achieve these standards, then you will be able to achieve the objective. Am I clear? Let me make it much more simpler, Nana. When you were in CMA Foundation, what was your long-term objective? To complete CMA, right? To complete CMA, definitely you will have a step-by-step procedure. You will have a step-by-step procedure. First you need to complete CMA Foundation, then you need to complete CMA Inter, then articles, whatever the things you have, then you need to complete CMA Final. Now then after you will define how to complete CMA Foundation, how to complete CMA Inter, how to complete CMA. Isn't it, Nana? In each level you have to get a minimum of 50%, isn't it, Ra? On aggregate you have to get 50%. Simply passing does not make you qualified. Not only you have to pass, but also you have to get an aggregate. Are you able to follow, Nana? Completion of CMA is long term. Now once you have set an objective, you need to define step-by-step procedure. What is the first step? I need to complete my CMA Foundation. With how many marks? Minimum 50%. Then I have to complete my CMA Inter. Both groups or single group? Both groups. In each group, how many marks I need to get? Minimum 50%. Now these are called as standards that you have set or the institute has set. Then after what you will do, Nana, you will compare your actuals with the standard to know whether you are on track in achieving your long-term objective or not. Now once you start comparing your actuals with the standard, if your actual percentage is more than standard percentage, that means you are on track. That means you are in control of your objective. Am I clear? But if your percentage is less than 50%, that means you are in control or out of control. That means immediately you have to take things into control. That means immediately you have to manage everything. You have to see where you are getting wrong. And immediately you have to take rectifying steps. So whatever the thing that I have explained is nothing but strategic performance management. You will set an objective. To achieve that objective, what are the steps we need to follow? That you will define one by one. You will start performing according to these steps. And from time to time, you will start comparing your actuals with standards. If the difference is favorable, no need to worry about it. I mean to say variance. I hope you people remember standard costing. Do you have any idea regarding standard costing, Nana? Where we have defined the variance into adverse and favorable. If the variance is favorable, no need to worry about it. The standard that you have fixed is 50%, you are getting 60% average. There is no need to worry about it because you are getting more than that. That means you are on right track in achieving your objective. The same thing for the company also. Company has set an objective that it wants to achieve in future. For that, it has defined set of rules and regulations which it wants to follow in day-to-day activity. That is called as performance. Now, once that is defined, it wants to compare the actual performance with standard performance from time to time. And wherever it is necessary, it has to take appropriate steps to control it. That is called as management. Management is nothing but controlling. Am I clear? Management is nothing but controlling. So basically is strategic performance management. So strategic means nothing but it's a long term planning now. It's a long term planning to achieve an goal or objective. Performance means execution of plan. Performance nothing but execution of plan. And management means dealing or controlling process or people. Managing things, nothing but dealing or controlling. Execution of plan or process. And dealing or controlling of process or people. Okay, so every organization has to perform this because every organization has a vision. And to achieve that vision, definitely it should set certain guidelines. It should define certain procedures. It should define step-by-step procedure. Now, once it has defined that procedure, it has to continuously monitor whether everyone is following that guidelines or not. And wherever necessary, it has to intervene, rectify in case of any adverse deviations. Am I clear? So it's a standard thing which every organization has to do, provided it wants to do business for a long period of time. So in first chapter, we will learn all the basic things that we come across when it comes to strategic performance management. What do you mean by performance? What do you mean by productivity? What do you mean by efficiency? When we talk about performance, not only internal factors but also external factors will also affect the performance of the organization. What are external factors? Supplier is an internal factor or external factor? Customer is an internal factor or external factor? Employee is an internal factor or external factor? All these factors will affect the organization. So all those basic points is covered in the chapter. Now, when it comes to second module, okay, the second module is called as performance. Now, once we have become comfortable with all the terminologies that we use in this subject, then we will go into depth. Performance measurement, evaluation, and improvement tools. Performance measurement, evaluation, improvement tools. To know whether we are in control or not, first we should measure it. First we should have data, right? Now using that data, see what I have said, Nana, we'll define standards and we'll compare the actuals with the standards. So first we need to get actuals. That means we have to measure. Once we have measured, then we will compare it with the standards. Isn't it right? That's what we do in standard costing also. You have set an objective. Now to produce that kind of output, what is the standard cost that we will incur and what is the actual cost that we have incurred? Comparing the actual cost with standard cost. That means before comparing, first what you should do, you should calculate actuals. That means first we should measure the performance. Then we will evaluate the performance. Evaluation means comparing it with standards. And wherever necessary, we will try to improve the performance. Am I clear, Nana? By measuring, you will come across actuals. Evaluation means comparing actuals with standard. That is called as evaluation. Evaluation. We will evaluate your results. Results means nothing but grand average. The grand average, that minimum grand average that you should get is 60%. Are you getting 60% or less than that? If it is less than that, then we have to come up with some improvement tools. If it is more than 60%, no need to worry about it. Next one is improvement tools. So here, most of the topics will be relevant to financial management. That is DuPont analysis. This is already covered in your CMA financial management. 2 or 3 formulas related to DuPont analysis will be covered here, not anything major, okay? Then after RONA analysis, nothing but return on net assets. Return on net assets, okay? Analysis. There is one more topic which you are well aware in your OM now, that is balance scorecard. Balance scorecard. There are some topics which are completely new to you, Nana. Six Sigma. Okay, and lean management. Lean management. What do you mean by lean? Completely opposite to me. Isn't it? Lean management. That means getting things done with as much less resources as possible. Now, when we talk about management, we don't need all the hierarchies. When you talk about management, we don't need all sorts of professionals. We don't need all sorts of professions. We should be able to identify which person can do this kind of work, and we'll employ only that particular person. That means getting things done by using as less resources as possible. That is called as lean management. Okay, Six Sigma and lean management. Next, Nana, TPM. TPM stands for Total Productivity Management. Total Productivity Management. Or productive management or productivity management. Next, Nana, TQM. TQM stands for quality. When it comes to management, we technically don't focus on quantity. We focus on quality. That is the reason why we are not stopping with productivity. We are extending productivity topic into efficiency. Initially, we focus on productivity. Once we have achieved our productivity, we extend that topic into efficiency. Both are not one and the same. In fact, the next step of productivity is nothing but efficiency. Okay, so these are some of the chapters which are covered in this. Now, the weightage of this chapter is 15%. 15%. The weightage of this chapter is 15%. Now, next, third topic is completely related to economics. That is economic efficiency of the firms. The weightage of this chapter is 10%. So you can easily score 10 marks here. You can easily score 10 marks now. What are there are only 3 topics in this module. What are those? The first topic is economic performance indicators. There are some factors which will indicate whether the company is going to face upward trend or downward trend. beforehand to the management. There are some factors or variables which the experts have identified. Just by studying those variables, the company can predict the future. The management can predict the future, whether they are going to be in expansion phase or contraction phase. Am I clear, Nana? So these are called as key performance indicators. Since these indicators help the management in knowing the performance of the company, they are called as key performance indicators. Okay. So what are key performance indicators? That we will learn in this chapter. Next, Nana, is your profit maximization. Profit maximization in different markets. So altogether we have two markets, Nana. One is perfect competitive market and the one is imperfect competitive market. I hope you people remember. When it comes to imperfect competitive market, we have monopoly, duopoly, oligopoly, monopolistic competition. Am I clear? Are able to recollect these things, Nana? Again, that entire content is dumped here with graphs and etc. But you will get more marks related to problems here. In this, we will use maxima, minima. Maxima and minima concept. Maxima and minima, which you will again learn in your SCM, strategic cost management. Okay, we'll use maxima to calculate maximum profit. You will use minima to calculate minimum cost. Because the ultimate objective of any organization is to maximize profits and minimize. Okay, altogether 5 or 6 problems are given, but in our material we have kept around 13 to 14 problems for the sake of practice. Okay, definitely you will get a problem and a MCQ from this particular chapter. In fact, what students do is that they will be thorough with BV and they will be thorough with 3rd and 4th unit in this subject. So in this way, they are able to score more than 70 marks. And the last one will be your market factors affecting pricing decisions. Market factors affecting pricing decisions. There is a 3rd chapter. Last chapter is your enterprise risk management. Amma? Enterprise risk management. 15% of the total weightage. Here also we have 3 chapters. First one is risk management, which is completely theoretical, where you will learn what is meant by risk. In fact, what is meant by risk, Nana? No. Both are different. Uncertain. It may or it may not. That is uncertain. Risk. It will. But how much we don't know. Risk means loss. But how much? Uncertain. You may get profit or you may get loss. That's why we always focus on minimizing our risk. There is a clear distinction between risk and uncertain. Unfortunately, we use it as synonyms in day-to-day usage also. Uncertainty means you don't know what is going to happen. You are not sure about anything. You are not sure about success. You are not sure about failure. That is uncertainty. Risk. You are sure about failure or loss. You have completed a project. You know that by doing this project in this way, you are going to suffer losses. In such a case, what management will try to do? It will try to reduce those losses as much as possible. Whatever the things that are in your control, you will try to control it and reduce the losses. That is risk. Risk is generally associated with the loss, Nana. Risk is generally associated with loss. Am I clear? Because from a management point of view, risk means we'll discuss in that way. From financial point of view, return and risk are completely different. You're expecting a return of 12%, you got a return of 10%, 2% is your risk. The same thing is extended here also. Now risk is 2%, right? Now you want to reduce that risk as much as possible. Make it 10.5. At least you're able to get 5% return extra, right? That's what management has to focus on. You're expecting 12%. You are after doing all the calculations, you are expecting you will be getting 10%. That means you are losing 2%. Now what else I shall do to reduce this 2% to 1.5%? That is risk management. Now when it comes to risk, there are two types of risk. What are those risks? What are these two risks are called? Is management concerned about both the risk or only one particular type of risk? Explained in this chapter. Am I clear? And completely theoretical. Now basing on this chapter, we have corporate risk management. The name itself suggests how the companies will manage the risk. In the first chapter, we will study risk management in general sense. Now, how the same thing is done by companies. How the same thing is done by companies. Again, it's theoretical now. In first chapter, we'll study risk from general point of view. In second chapter, how the risk management is done by companies. Third chapter is important. That is corporate failure. Corporate failure. Very, very important. Definitely you will get 10 marks question from this chapter. Till now it has been a trend that we are getting 10 marks from this question. And that too not a theoretical question, completely problematic question. And that also we know from which question it will be. It is nothing but Altman Z score. Altman Z score. We have Z score, we have M score. There are two types of problems which will help us in analyzing the failure factor. Nana. But that means corporate failure means when we can declare a company as a failure company from investor point of view, because investor wants to have some sort of basis whereby he can decide which company will be a successful company, which company will be a failure company. So there are some parameters given by Altman. So he has given a formula. By using that formula, we will get a value. If that value is more than a limit, it's a failure company. If it is less than a limit, it's a successful company. If the company is a successful company, the investor can blindly invest in that particular company. Okay, that is what we are going to learn about in this corporate failure chapter. Am I clear, Nana? So everything is defined systematically. First we will learn about the performance, then we will try to measure. Learn about the tools and techniques which will help us in measuring the performance. Not only measuring, evaluating and improvement tools. Nana. Then we'll talk about economic performance indicators. What do you mean by economic performance indicators? See, whenever we talk about performance, we always focus on financial parameters, which is completely wrong. If someone asks you to go and see whether the company is performing well or not, what we do by default, Nana, we'll simply refer to the balance sheet and profit and loss account. Isn't it, Ra? But simply going through balance sheet, or simply if a company is having a good amount of profit, or if a company is having a good amount of profit over the past 3 or 4 years, it does not mean that company is performing well. So when it comes to performance of a company, we generally focus on financial parameters. But what management says is that along with financial, we have to focus on non-financial parameters also. What are those non-financial parameters? Earlier, we used to focus on the shareholders. Now, everything is converted from shareholders to stakeholders. What is the difference between shareholder and stakeholder? So all these things are covered in these 4 chapters. In last, risk management, because when we do business, definitely there will be risk. If the company is able to manage its risk, that means it can guarantee the maximization of its profits. Am I clear, Nana? So all these topics are covered in our syllabus. We will start with the first chapter. That is our first module, Introduction to Finance Performance Management. Our material is given to you, my dear. Right. Right, Nana? So, as I said, in the first chapter, we are going to learn basics about each and every element, right? The first term that we need to understand is performance. The first thing that we need to understand is performance. So, what do you mean by performance? Execution of a plan or process. Generally, what happens is that every organization will define long-term objectives. If you want, you can call it as vision also. Before start of the business, every organization has to define their mission as well as vision. Proper investor will not only look into these things, but also, especially when it comes to startup companies, they will look into the vision as well as the mission. And whether their activities are correlated with the vision or mission or not. The performance of the company is correlating with the vision and mission or not. Okay, so define long-term objectives. Then after, they will define what? To achieve these long-term objectives, define step by step or define steps to achieve the objectives. Define steps to achieve the objectives. Once it is done, then what? Measure performance. Evaluate performance and develop performance. Measure performance, evaluate performance, and develop performance. And it's not a one-time activity, it keeps on happening again and again and again in a loop. That means this measuring of performance, evaluating performance, and development of performance keep on happening again and again and again. You have measured the performance, you have evaluated the performance, you have developed the performance. Now the big question is that performance of what? Now you can simply consider performance of a company. We can't simply just say performance of a company, Nana, because when we talk about company, it's not a single unit or single individual. It consists of efforts of different people or different departments, isn't it, Nana? So what kind of performance we are talking about? What management says is that whenever we talk about performance, we talk about performance of employees. You talk about performance of employees, because what management experts say is that the gap between or the difference between an organization and its objectives is bridged by employees. The gap between an organization and its objectives is bridged by employees. In simple terms, employees are the one who will help the organization in achieving their objectives. Entrepreneur invests the money. Entrepreneur has the idea, but he can't perform each and every activity on his own. He need to employ labor. Isn't it, Nana? I have the money. Mukesh Ambani has the money. Mukesh Ambani has the idea. But he himself alone cannot make Reliance Industries Limited one of the largest companies in the world. He needs the help of employees. Without employees, no organization can achieve their objective. In fact, your objective, achievement of your objective is completely dependent on the efficiency of the employees. More the efficient the employees, the quicker you will achieve your objectives. So when we talk about performance here, we are talking about performance of employees. Am I clear, Nana? You may have a great idea. You have invested huge amount of money. You have all kinds of advanced technology in the organization. Still, you need employees to operate those machines, to operate those technologies and softwares. Without them, you can't achieve anything. That's why in simple terms, out of all the factors of production, labor is called the active factor of production because raw material is not going to convert on its own into finished good. Your company is as good as your employee. This is a general statement that is usually given by successful entrepreneurs. If you want to be successful, employ a superior person under you. I mean to say, employ a brilliant person under you, a more capable person under you. Make sure that he is working for you. If you want to be a successful, there is no need for entrepreneur to be smart, Nana. He can do simply one thing. He can employ smart people to work for him. When smart people start working for him, automatically his company will become successful. Am I clear? So here when we talk about performance, we are talking about performance of a employee. Am I clear, Nana? So that is what we will focus here. In this initial few questions, we will focus on performance of an employee. Am I clear? Now when it comes to performance management, or when it comes to features here, features or components of features of performance management. Now, performance management means what? Management of performance management means what? Are able to follow? Management means nothing but controlling, right? Controlling what? Performance. Performance of whom? Management of performance of employees. So here we are talking about how to manage the performance of employees. Sir, why we are focusing only on employees? Because they are the one who will help you in achieving your objective. Without them, the objective will always remain the objective. The management itself alone cannot do anything. Yes, management plays a very important role, but itself alone cannot do anything. It needs the help of employees. So for that reason, management has to keep on monitoring the performance of the employees. So here we are talking about management of performance of whom, Nana? Employees. So when it comes to management of performance of employees, we have few components or elements. The first one will be performance planning. Performance planning. The first one will be performance planning. Nothing but fixing standards. Planning means nothing but fixing. Who will define the objective? Employee or employer? Employer will define the objective, isn't it, Nana? So objective. Now keeping this objective in mind, both employer and employee will sit together and will fix or plan the performance. Nothing but fix the standards. Objectives. Basing on these objectives, employer and employee will sit together and plan the performance or fix the standards. Now you may ask, while fixing the standards, why the employer has to sit with employee? Because who is going to do the work? So employees know what is realistic, what is unrealistic. For example, before start of each final session, Prakash sir sits with us in deciding allotted hours. How many hours are to be allotted to each chapter? Now you may question us, why he has to sit with us? Why can't he decide himself? Because he is not the one who's teaching the classes or taking the classes. We are the one who's taking the classes. So we practically know which topic takes how many hours. So what we will do, Nana, he will simply pass on as a paper in which we have chapter names and a blank column will be given to us. In that blank column, we will mention the time required by us. Now that will not be final hours, Nana. With these hours, we too will sit and he will explain his limitations. Because I will be thinking only about SPM, isn't it, Nana? And SPM is not your 800 marks paper. It is only your 50 marks paper. So there are around 7.5 papers extra. So management will have a broader view, whereas employees will have only a narrow view. I'm only concerned about SPM. Management needs to think about entire course, isn't it, Nana? So management will not finalize whatever the hours I have given, Nana. They will see whether these hours given by me are within their limits or not. If they are, they will be happy with that. If they are not, they will discuss with us. Sir, we can't give 140 hours. The maximum hours that we can give is 115 only because of these limitations. You do one thing. Try to reduce this 140 hours into 150 hours. You decide in which chapter you want to reduce, in which chapter you want to increase. But total hours should be 115. This is done after the completion of syllabus or before start of the syllabus. That means what we are doing, we are fixing some standards. We are fixing some standard. That means this is called as performance planning. Both together are sitting together and planning the performance of whom, Nana? Employees. And from time to time, what he will do, once the classes are started, Nana, he will compare whether this idiot is sticking on to the allotted hours or not. Arey Baba, for the first chapter you have given me 10 hours. Now if you have completed the work in 9 hours, then also an issue. If you have completed the work in 11 hours, then also it's an issue. You should complete the work on dot, that is by 10th hour. Now if you complete the work by 9th hour, then we'll ask whether students have understood the subject or not. That's the first question. And if any one of you will raise a hand, then again, it's a headache for me. Now if I taken 11 hours, even the students are happy, but management will not be happy. Yes, students are happy, sir, but if you keep on taking time like this, then at the end of the day, we will not be able to complete the syllabus on time. So I have to stick on to 10 hours. So this is what we do, performance planning, basing on the objective. Objective here is to complete the syllabus on time. Both employer and employee will sit together and will plan the performance. Okay, Nana. Now here employer will be called as appraiser and employee will be called as appraisee. Nothing but reviewer, reviewee. Who is going to review my performance? Employer. I'm an employee, right? For your kind information, I'm an employee in this organization, not the employer. Okay? And the directors are employers. We both sat together. We have fixed some standards. Now, from time to time, who is going to review? Employer. Whether this idiot is sticking on to the standard or not. That is called as performance planning. Am I clear, Nana? That is the first point. The second point will be your performance appraisal. And I think I have already explained what is meant by performance appraisal and review. Isn't it, Ra? Both go hand in hand. And once you have planned, then once the actual work starts, what we will do? We will appraise and we will review from time to time. Am I clear? Once we have set standards and once the classes start, from time to time for each chapter, they will apprise and they will review. And part of this appraisal and review is nothing but your feedback forms. The love letters that you give to the management. We call them as love letters because it does not have any name, etc. Right? Okay. So it's a part of it now. Their feedback is also there for us here. Am I clear? Understood now? The second point is performance appraisal or review. The third one will be your, as I said, feedback. And if feedback is good, no issues at all, Anna. But if feedback is not good, then what they have to do? Counseling. Counseling of employees. This is not what we are expecting from you. You are supposed to work in this way, but you are working in some other way. That is the reason why we are getting this negative feedback from you. They will go through all the evidences they have. They will talk with students. They will go through the video classes. And basing on the things that they have understood, the management will counsel the staff. Okay, you are doing things in this way. It is better to do in this way. Let us see how students react now. Am I clear? So feedback and counseling of employees. Next, Nana. Yes. If management is happy with me, obviously I will come to know that management is happy with me, right? So simply pat on the back is not sufficient for me. I will be expecting some sort of, because at the end of the day, I'm only concerned about one thing. Is my account credit on the first of the month or not? And by how much? And am I duly rewarded or not? Because even after working efficiently, if there is no reward, then from next time onwards, I will not put any efforts. Am I clear, Nana? So when the management expecting some sort of efficiency in my performance, then obviously vice versa, I will be expecting some sort of reward in return. So fourth point will be your reward. For what kind of performance? Bad performance or good performance? Reward for good performance. And fifth point, Nana. Performance improvement plan. Yes, we have successfully completed the second batch. This is third batch. Before this one, the final batch was called as second batch now. We are quite happy with your performance, but we don't want to rest on this performance. Next time we are expecting more from you. And when you're expecting more from me, obviously, and before we ask, the management will themselves come up with the approach now. No need to worry about it. If your performance improves as expected, so do the reward. In simple terms, management is not going to rest on a single objective. Once we have achieved an objective, immediately they will fix an higher objective. And if you are able to achieve that one also, next time what they will do, they will fix much more higher objective. So this entire process keeps on happening again and again and again. Am I clear, Nana? So these are the components of performance management. Here when we talk about performance, are we discussing about the entire company or one particular section of company? Are we discussing about the entire company or one particular section of company, Nana? We are discussing about one particular section of company. That is nothing but employees. That's what I said. When we talk about performance, we are concerned about whose performance here? Employees' performance. And whatever the points that were discussed below are all related to employees. The same thing is given line by line in your material. In the next class, we will go through line by line. Am I clear, Nana? So first I will try to explain it briefly, then we'll go through line by line. Am I clear, Ra? And after a couple of classes, what I will start doing is that at the end of each class, I mean to say, I will stop the class 5 minutes before the end of the class and I will give that 5 minutes for revision purpose. Is it okay? Right, thank you, Nana.